Hi everyone, today let's talk about Meta, then we'll get into the data, then we'll take a look at the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Meta's earnings were very good, and then they came out and put out weak guidance, and then the stock tanked pretty dramatically. Earnings per share, $4.39 versus $3.64, much better than expectations. Revenue beat also by a little bit over $500 million. Daily users beat, you like to see it. Monthly active users in line here. Average revenue per user continues to beat. And net income rose 164% up to $11.58 billion or $4.39 per share. Meta continues to outperform its competitors, especially Alphabet, which reported yesterday, and their ad revenue only increased by 9.5% and only 5% from Snap, obviously a much smaller rival there, but outperforming in the ad space. CEO Mark Zuckerberg came out and said that they are spending more time on Facebook and Instagram as a result of their improvements in recommendations. Overall, everything looks good here. They also said they're doing good things with AI, and they're excited about the Quest 3, as well as the Ray-Ban smart glasses. They also mention here that Meta has fired quite a few employees, down 24% year over year, as they continue to cut costs and improve margins. But not mentioned here, they said they expect weak demand for ads going forward, and those comments promptly tanked the stock into oblivion, and we'll take a look at that on the charts. Moving over to the economic calendar, new home sales crushed it. You'll like to see it. Building permits pretty close to in line, slightly down in terms of percentage versus the expectation, way below the previous read. 5-year note auction above the previous. And I haven't seen anything on this FedPal speaking. Put it down in the comments if you've seen it. And then looking at tomorrow, you can see we have core durable goods orders at 8:30. That could be interesting. We also have GDP numbers at 8:30. Fed Waller speaking. He's been interesting here recently at 9 o'clock. 7-year note auction, and then Fed balance sheet. Moving over to earnings, you can see those great numbers here for Meta. Thermo Fisher missed on the top line, beat on the bottom. T-Mobile, same thesis. IBM, right in line on revenue, but beat on earnings. Boeing, earnings per share, just barely missing. Beat on revenue. General Dynamics beating on both. Overall, not terrible. It's just that forward guidance for Meta. You don't like to see it. And then looking at tomorrow, we have Amazon after hours. At this point, you would expect that to be pretty rough, especially with Microsoft doing well in the cloud space and Meta saying that ads are going to be weaker going forward, probably going to struggle there on Amazon. We also have MasterCard, Comcast, Intel. After hours, you have Honeywell, Bristol Myers, Altria, American Tower, Chipotle Mexican Grill, Ford tomorrow, as well as Hershey. A couple of interesting companies. Northrop Grumman is tomorrow also. Obviously, the big player being Amazon. Moving over to Max Payne, you can see we are all the way down at 416. Max Payne still sitting up at 426. Total options up to 1.4 million. Put call ratio continues to decrease here. Put wall at 420. We have broken below that now. If we finish at the bottom of the calls, that would be around 414 to 416, which is basically already where we're at. And there are a ton of puts in the market. If we continue to push into this area, that's going to be pretty interesting. I don't expect to continue to push into this zone, but at this point, I've said that a few times, and we continue to push lower. Moving over to the charts, looking at that structure we talked about yesterday, we got below it in the pre-market, fell throughout the session. Now we are clearly at that trend support. Very, very interesting here after hours. You can see that medium term downtrend line on the daily chart here, zooming in. Critical level. We are there after hours. Let's expand that out a little bit. If that level breaks, we could be looking at 410.50 tomorrow. That could be interesting. That would be a massive push lower. But we are clearly at a lower low versus this previous low. And like I said, if this confluence of support breaks down, this momentum is going to follow through into oversold conditions, likely to get into this previous consolidation around that 410 area. You can see that highly traded zone based on this current picture right in that same area, and that's probably where we're going to be headed. Moving over to the NASDAQ, similar thesis, took out that trend line, fell straight down throughout the session. Basically took no breaks. We did find some support at this trend line. I tried to get in at that position, and that was a little bit premature. And now after hours with that meta breakdown, we are pushing much, much lower. Still potentially could hold this 346.87 level. Momentum starting to fade. You can see just how oversold we are. Very, very oversold on the hourly chart. Looking at the daily chart, we're not quite oversold yet. Big bearish momentum. And again, I want to show this same structure because we were right at that trend line where I would have expected to find some support, just like we had several times before. We were right there, and now with Meta, that's pushing us down to this next potential support. If this breaks down from that level, the next one for me is the 200 SMA all the way down at 338.59. If that breaks, then I'm going to have to be very, very bearish until we find that level. We're below all the EMAs and SMAs now on a closing basis. That 144 was continuing to hold up until today. That is now broken down, and we're pushing through that level on big volume. Everything says more bearish now that we are below this support level. Moving over to the Russell here on the weekly chart, I want to take a look at the longer term chart here. We've been talking about this 164 level, how critical it is. You can see last two times we came here, found very good support, rallied all the way back up to that 200-ish area. And now here we are again, testing that level. We are just barely below it, but you can see we threw some wicks below it here previously on the weekly charts. Momentum, very bearish. We are at that longer term support here. Zooming out, you can see that is a very, very long-term support. We're also testing these pre-COVID highs and the highs going back to July of 2018. Super, super critical zone here on the Russell. If this level breaks, you should expect a lot of downside, and I would expect it to be quite violent in my opinion. And looking at this highly traded zone, you can see it's sitting all the way down around 154. Certainly a possibility where we could get into this area, this previous consolidation, going all the way back to 2019 as well. Super, super interesting here on the Russell. Looks very, very bearish on the weekly chart. Moving over to the Dow just for a moment, really does not look nearly as bad as some of the others. Obviously still in a short-term downtrend, but still holding this double bottom at this 329.40 level. We're still above it after hours, which is better than just about everybody else. We haven't really gotten into the heavy hitters for the Dow yet, but still holding this level. Could be a double bottom. Even if we pulled back, you still have a lot of support at 325.72. You can see we wicked that low here in May of 23, and it doesn't look so bad. Moving over to the equal weighted S&Ps on the daily chart, absolute dumpster fire. We did have the gap up yesterday, tested that 137.56 level, gap down, fell throughout the session. We took out this low here from March of 23. Zooming out here, you can see 134.14 is the next level of support at this previous high from October of 22. We also respected it back here in June of 22, but we are really selling off pretty aggressively here. Honestly, I would expect 134.14 to break, and I wouldn't expect any support until 131.05. And then if that breaks, then we'd be looking at this low here from September of 22 all the way down around 127.50 or so. Moving over to Apple and Tesla, obviously both of these were a dumpster fire on the day. Got very close to testing that 21 EMA, and it continues to sell off super aggressively even after hours here on Apple. Pretty uncharacteristic. You can see we're now at these lows going back to the end of September. We're also below that trend line. Next level of support for me down at 163.19, which is about another 6 points lower from current prices. That is a pretty dramatic move. Could find some support going back to April of 23, up around 166.60. I might add some levels on here for Apple going into tomorrow's session. But right now, support down at 163. Similarly on Tesla, fell throughout the session, fell after hours, looks terrible. 197.75 is my next level. Moving over to Meta and Google, you can see Meta rallied initially. Big wick to the upside, up around 316, 55 EMA, up in this zone. After the big beat on earnings, then we got bad guidance and it broke down super dramatically. We were sitting just above 298.15, and then we broke down about another $10 of downside, almost got to 283.45. And the last time we were in that range was going back to mid-August. Super interesting area. Certainly could hold. The earnings was still pretty good, and even with the weaker guidance, I wouldn't say that Meta is a dumpster fire of a company, not the way that Google seems to be struggling. And with that earnings yesterday, you can see Google went from up around 140 all the way down to that 122.50 area, straight down, the epitome of a falling knife. Massive volume on the day, massive bearish momentum, super oversold all the way down to 18 on the 4-hour chart, and we are closing right on the lows after hours, people selling as fast as they can here on Alphabet. Zooming out here, you can see the next level of support is 122.54, going all the way back here to July of this year. Next level below that, 116.64, going back to the low here from 11 July. Moving over to staples and discretionary. Staples continues to rally slightly, way better than everything else we've looked at, especially big tech right now. We're above all the short-term EMAs, we're above the highly traded zone. Longer term, still a downtrend, but holding up way better than everything else. Discretionaries, still dumpster fire. We rallied up, retested that 153.90 level, broke down dramatically here today. After hours, we're down even more. 148.89 is the next level. I do have the next one at 147. Those are pretty tight together. Realistically, 143 is probably your next level after 148. Moving over to utilities and transports. Utilities had a nice day, up 0.5%. Now have a low, higher low. Island reversal on that higher low, rallying up. We're clearly at resistance, but if this breaks out here, maybe gets above $59.95 or $60, potentially looking for a rally up to 61.43, that could be interesting. Overall, utilities holding up pretty well, as you would expect in a big down move. Transports, on the other hand, continues to sell off super dramatically. Another super bearish day, 2% after that level broke at 221.84. We're now into this previous consolidation low from March of this year. Next level for me, 213.27 at these previous lows. Below that, we have to go all the way back down to 207.38. We did get below that in the October low of last year, but these are the ranges that we're looking at now. This is a really big down move across markets, and transports is no exception. The interesting thing here is that transports is selling off dramatically, and the Dow is actually holding up okay. Moving over to breadth, 50-day average, basically flat. We're already very low, can't go much lower. It has happened before, but we are in the bottom of the range, continuing to sit in that area. 200-day, however, continues to sell off dramatically, down another 12% here today. Took out that 29.39 level. We talked about that level being kind of weak. I didn't really like it to begin with, but it did bounce off that yesterday. Broke right through it here today. 24.25 was the level I was watching going into yesterday's session. We're not there yet. At this rate, we could hit it tomorrow. That would be interesting. But once we get into these lower ranges on the 200-day average, there will have to be some kind of substantial bounce. Nothing moves in a straight line forever, but we really haven't seen any signs of reversal here yet. After we had this really short-term bounce at the beginning of October, and then it's been basically 2 weeks straight of down move. Moving over to yields, 10-year yield went straight up here today. Very close to that 50 line. That's 3 days of down move, big day of rally. Took out almost all 3 of those candles in one push. 2-year yield continues to sit in the same zone. It's been here for a while. But if this 10-year eclipses 5% here tomorrow, that's going to be another big down move in my opinion. Moving over to the dollar, did rally up a little bit today, not much, still in the same range. You can see we're back at the highs from 18 October, still consolidating in the zone. We're above all the EMAs and SMAs now on the daily chart. Could look to a breakout at this point above 106.84 up to 108. That could be interesting. Momentum ticking back towards bullish, crossing above the SMA on the daily RSI. Does point towards a little bit more bullish movement, and if we do see this dollar breakout, that could be quite weak for equities. Moving over to the volatility indices, we did get a bullish day on both of them, but it wasn't as dramatic as I would have expected. We got a massive down move across indices, and the VIX just barely moved higher, back into the same range that we've been in. I really want to see this spike up to that 24.50 area, hit that level, and then see a more dramatic breakdown. We're not there yet. Everything says this is still going higher on both charts. Moving over to my accounts, I did okay until we got that big earnings announcement on Meta, pushing the NASDAQ much further down. We were down over $8 on the NASDAQ, and I did have the equivalent of 200 shares bullish going into the session. I was able to mitigate more than half of that, selling some calls here, and I do have those calls still. 353, 2 calls at that level for $1.80 each. So I have about another $230 or so of potential profit on that position tomorrow. And I do expect to be out of the money, especially with the massive down move we've seen after hours. In terms of puts, I did end up rolling down and out here to 353 for 2 days, looking to effectively buy the stock down at 348, and we are already below that price. We'll see how that plays out. I've been trying to play a little bit of defense on those puts, but eventually reestablish a core position. It's just not working out quite yet. I do have some 355 calls also for $2 each. So that would be a net $400 profit on those calls to continue to protect me to the downside. Just to give you an idea of my current profit profile, you can see my break even is all the way down at 344.27, which is pretty good. So that gives me another couple of dollars of downside potential. Obviously, my max profit is up around current levels, and I can sell some more calls tomorrow to give myself a little bit more benefit to the downside and a little bit more protection. But right now, I am long off of that much lower level at 344.25. Let me know what you think of Meta earnings and the potential effects on Amazon going into tomorrow's session. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. I make videos like this every single day that the markets are open, as well as Sundays, so don't miss out on any of those episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.